High-purity alumina is still highly niche, poorly understood. In many ways, lithium was 5 and 10 years ago.
One of the big growth areas for HPA is driven by the move to AI.
We have 12 projects now that have gone into the commercial relationship stage. The 9th of September data, we had approximately $85 million US in the pipeline. That's now growing to 130 million.
Welcome back to Rockstock Channel. It is Wednesday, January 8th. Today, we're doing a follow-up with Advanced Energy Minerals, a newly listed high-purity alumina company that's been attracting a lot of attention since its IPO. AEM, which is their ticker symbol on the ASX, raised approximately $45 million in the IPO at 53 Australian cents. The stock traded strongly out of the gate with solid liquidity for a newly listed name. Since listing, the company has been trading with a market cap of around 300 million Australian dollars, which reflects both early investor interest and the fact that the business is still at the beginning of its public market journey. The IPO is underwritten by Canaccord Genuity and Ord Minnett. We understand that both brokers are expected to initiate research coverage in the coming weeks, which should add further context and independent analysis around AEM's strategy and progress. If you'd like a copy of this research once it's published, please reach out to us at rockstockchannel@rkequity.com. Before we go further, a quick standard disclaimer. RK Equity is a strategic advisor to and holds equity interests in Advanced Energy Minerals. But we are not financial advisors, and nothing in this video is intended as financial advice. This content is for informational purposes only. Please do your own research and read the disclaimer at the end of this video. The high-purity alumina space is an exciting, fast-growing industry that has grown over the last 10 years at a 13% cumulative average growth rate, driven by new applications in the modern economy, in particular artificial sapphire for LEDs, batteries, advanced ceramics, and the highly topical semiconductor sector. Growth is forecast to continue at least 10% CAGR over the coming decade, which will require additional production capacity to be put in place. AEM is the first newcomer to put in place commercial-scale production capacity after delivering 2,000 tons per annum of 4N plus purity capacity last year prior to listing on the ASX, where there are a number of other listed HPA-focused companies at various stages of development. AEM achieved this result by rectifying the equipment selection issues of a previous owner and expanding other circuits, investing over 70 million Canadian dollars in the process. It's also worth stepping back and reminding investors, especially in Australia, that restart stories are not unusual in mining and processing. In fact, some of the most successful ASX-listed companies today went through bankruptcy or receivership earlier in their lives, and like AEM, have benefited from substantial sunk capital along their journeys. Orbite spent around 270 million Canadian dollars on this asset prior to AEM acquiring its assets, including an extensive patent portfolio. We think that two useful parallels for what AEM is doing in Quebec are North American Lithium, now operated by Alevra, and Champion Iron Ore. Both companies had gone bankrupt before being restructured. Both are now operating successfully. Alevra now has a market cap approaching 1 billion Australian dollars. Champion Iron has a market cap north of $3 billion. Advanced Energy Minerals is following the same playbook, a reset, not a restart, with a focus on disciplined engineering, staged scale-up, and customer qualification. I also want to remind viewers who is behind this company. Richard Seville, AEM's executive chairman, was the founder and managing director of Orocobre from its IPO in 2007 when it had a sub-15 million Aussie market cap. That business ultimately became Allchem, which merged with NYSE-listed Livent with a value of $6 billion US. That track record matters. Richard continues to invest in AEM as he did with Orocobre. And today, for the first time on Rockstock Channel, we're also joined by Mick Adams, AEM's Chief Executive Officer, who is an engineer with 40 years experience and has overseen the transformation of the CapChet asset since mid-2021. We look forward to Mick sharing some deeper operational and commercial insights. The goal of today's discussion is to give investors, especially those new to the high-purity alumina space, a clear view of where AEM stands today and how management is thinking about the path forward. So with that, let's get into it. Richard, Mick, thanks for joining us. My partner Matt Fernley is going to kick things off with some questions around pricing and real-world customer engagement.
Okay, great. Thanks a lot, Howard. Richard and Mick, again from me, thanks for joining us. I've been following this HPA space for a while now, and I have to say it's a fascinating area, very rapidly growing, rapidly evolving. I want to thank you guys particularly for the consultant report that you included in the prospectus you published, because it gives a lot of data on the HPA market, which wasn't publicly available previously. And for all those like me out there who put the anal into analyst, it's a really good resource. So well worth checking out if you want to see it. Now, let's just start off on pricing, because I think this is quite a complex area. Can we just talk a little bit just before we start on pricing about the differences in product in the HPA space? So could you guys just talk a little bit about what 3N means, what 4N is, what 3N plus is, 3N8 plus, all of this sort of jargon that we talk a lot about in the industry? What does it actually mean from an investor point of view?
So the N relates to purity, being an N for 9. So a 3N pure material is 99.9% pure. 5N material is 99.999% pure. We also throw in numbers other than N. So we talk about 4N5, for instance. 4N5 is 99.995% pure. And the purity is one of the key characteristics of the material that determine how it performs in different applications. And for particularly high-end applications, you want a higher purity. But it's more complicated than that, I must say, because each application is sensitive to particular impurities. So you don't necessarily just need a 5N material, a very pure material. You may be able to get away with a 4N material, but it has a very low level of impurity in a particular element, for instance.
Okay, so it's like sort of other battery grade materials that we might have come across, where the breakdown of the impurities is as important as the actual purity of the product.
That's correct.
Yeah.
I think there is a couple of other things to throw in there as well. There are two common crystalline forms of HPA. There's the alpha crystalline form and the gamma crystalline form. Both of those forms have commercial applications. We can manufacture both types. The alpha HPA tends to be a higher value material, and that's the one where there's most interest. But there are also interesting applications in the gamma space as well.
Okay, great. And so you're producing both alpha and gamma, and what grade are you generally producing at the moment?
We have the current circuit, which has a capacity of 2,000 tons per annum, is producing purity levels up to 5N. So within the 4N to 5N range is where we look to run it. We have plans to expand to 3,000 tons per annum later this year, and we in that additional capacity will come through a new circuit that we'll be installing, which will use a simpler manufacturing process than the one we have to use for our up to 5N material, and that will produce a 3N8 typically a 3N8 material, so just below the 4N purity, but with a simpler, more cost-effective process.
Okay, and is that looking towards a specific sort of client base or customer?
Yes, it is. I mean, as was sort of alluded to earlier, customers are sensitive to particular impurities. And what we're looking to do is produce a portfolio of products that will vary in price depending on how expensive they are to manufacture, as well as how they then fit with our customer requirements. So if we have a customer who is happy with the 3N8 material, with certain requirements on particular impurities as well, then we can produce that through our 3N circuit in a more cost-effective way than if we were forced to offer them a 4N5 material.
Okay. And you talked briefly about contaminants. On your listing update, you talk about uranium as a contaminant. Why is that important to the sort of key applications and the key consumers and customers for the products?
One of the big growth areas for HPA right now, which is driven by the move to AI, is in the what's known as thermal interface management within the AI chips. Thermal interface management is actually conducting heat away from the semiconductors to keep them cool. There is HPA is a particularly interesting product for this. It's got very good thermal conduction properties, and it is chemically very stable too. The reason for looking for low uranium and actually low thorium is because you want to avoid radioactive, particularly alpha particle radiation, coming from your thermal interface material, because that can interfere with the operation of the chips. So there is a very strong interest in HPA with very low levels of uranium and thorium contamination.
Okay, and is this a differentiator?
And if I could add, and particularly for the next generation of chips where the wafers get thinner.
Right.
Is that right, Mick?
Yeah.
And is this a differentiator for your product compared to other products that are available in the market?
There is a limited supply of low uranium product in the market at the moment. If you refer to the announcement that we made when on listing, we've developed a technique in the laboratory which allows us to reduce the uranium content of our HPA down to around 1 part per billion, which is right at the level of detection sort of available with normal testing techniques, and is considerably lower than, should we say, more conventional HPA that's currently available on the market.
Okay. Fascinating. Okay, I'm sure we'll come back to that later. In terms of the sort of specs of HPA, if I'm an investor sort of new to the sector, what should I think about in terms of looking at an HPA spec sheet? What are the sort of things that I should care about if I look at an average spec sheet? And we talked obviously about the uranium content. Are there any other like really deleterious elements that I should be aware of?
It depends to a certain extent as to what the user's looking for. Typically, the industry is more focused on metal contaminants than it is on sort of non-metals. Sodium, in certain applications, sodium, for instance, is sensitive. Iron is another one which you have to be very careful with.
Okay, that's great. So finally, on the pricing side of things, without breaching confidentiality, obviously, can you give an idea of the maturity of your customer pipeline? You know, the amount of customers in qualification, sort of repeat orders, and give an idea of you know, maybe give some visibility in terms of where your revenue is sort of pointing towards.
Yeah, certainly, Matt. In the update we put out on the 24th of December at our listing date, we updated the information that was in the prospectus, and that's the comparator there. So 9th of September data, at that point in time, I think we had approximately $85 million US as potential in the pipeline as a gross unrisked figure. That's now growing to 130 million. Benefiting from the end of the northern hemisphere holiday season. What was interesting in that reset of the pipeline is that the dollars per kilo had increased by 12% in that period, reflecting a greater concentration of higher value products. So that engagement with Japanese customers on the ultra low uranium product has been reflected in that pipeline, as well as the increased customer engagement on the slurries, which are used in the CMP, the chemical mechanical polishing of the wafers, again in that exposure to semiconductors. So that's the overall gross figure. It's a healthy pipeline, and this is being generated. I think Daniele joined us 3.5 years ago, so this is a pipeline that's been built over that 3.5 years, and in the data we produce or given to the market on that update, you can see that growth. What is in behind those numbers is we have 12 projects now that have gone into the commercial relationship stage. So that means you've gone past qualification. Qualification can take commonly 2 years, and if you think of it from actually maybe first engagement at a trade show, maybe longer than that. But the serious process typically 1 to 2 years, and then we have 23 projects in the industrial trials phase and 117 projects in the laboratory trials phase. So the way this typically works is you'll engage with a customer, meet them at a trade show, have an incoming, have an outward bound engagement. The first thing that you do is exchange spec sheets. They see what they like. If there's something there that's fitting their requirements, then you move on to laboratory trials. That can take, let's say, 6 months, because this can be quite slow in the first part of the process, unless there's a real, let me say, concern about supply, which is what we're picking up a bit at the moment. And then you move on. If you've got a product that they like at that point in time, then you move on to the industrial trials phase, and that's actually where you send them significant amounts of material, typically 1/2 ton or a ton, maybe 2 batches, and they can do some industrial scale manufacturing of their applications. And if you've got to that stage of sending significant amounts of material, there's an investment of time and effort by the customer, also us, and there's a high degree of probability that that's going to move on to the commercial relationship stage. You'll generally have a good indication from the laboratory work whether your material's going to be satisfactory. So you can think there's a high degree of probability of moving from industrial trials to commercial relationship stage. So if you look at that for us at the moment, and this builds for our ramp up over the next 2 years, we've got, as I said, 12 projects in commercial relationship stage. So that's a matter of now organizing the quantums for this year and beyond. And then 23 projects in that industrial trials phase. In the update, we didn't split the pricing between our 3N5 plus, our 3N8, and the 4N plus. But the basket of those on the ratio, roughly 2 to 1, is currently $27 a kilo. And if we look at the previous data, I think, Mick, it was something like $14 for our 3N5 plus, and $28, I think it was, for our 4N5 plus, that kind of range.
Yeah.
So that give you an idea of the difference in the pricing between those kind of products. If you're going to lower grades like 3N, then that's going to be a lower price point down at that sub $10 a kilo range. So that's, and that conventionally wouldn't be thought of as HPA. It's kind of just got a bit too low a grade at that point in time. So that will give people a pretty good idea.
Brilliant. Okay, thanks very much. That's really helpful. And I kind of feel like we should mention here that in terms of the structure of the industry, China's not really a big player in the high purity end of the spectrum at all, is it? I mean, you know, most of the high purity sort of 3N plus products are produced from outside China, and in fact, China is an importer of the high quality HPA.
That's correct, Matt. With a proviso. So basically, we have a split of markets. The rest of the world producers produce for the rest of the world. The big consumers are countries like Japan, Korea, Taiwan, and then sitting behind that, United States and Europe. Some anomaly there because there's HPA that goes into the oil sector, so that bolsters up Europe's usage in terms of manufacturing and use in around the world. So although China is the largest producer of HPA, it all stays in China, and it imports some of the higher quality material for high demanding applications. So absolutely right on that, Matt. You got the Chinese sector is very much dominated by use in sapphire manufacturing. Artificial sapphire, that then goes on to make LEDs, and it's been a major driver of growth over the last 10-20 years.
Okay, because I mean that's a real sort of differentiation with some of the sectors we look at, where obviously China dominates in terms of supply, and I think that's a really important differentiation when we're getting to the nitty gritty of why people might want to invest in HPA, because obviously it's a very, very different sort of supply environment, supply envelope, supply and demand environment. Okay, cool.
Well, I think there's significant sensitivity about that, Matt, and you'll have seen with the recent action of China with Japan on rare earths again. Mm-hmm. You know,
again,
that you know, the rest of the world does not want to be dependent on Chinese supply chains on what are critical small components for massive downstream implications. So there's that qualification process being locked in the supply chain, needing to be a reliable supplier. Those are far more important than the normal sort of commodity things you might think about.
Yeah, and I guess the other thing that also should be pointed out in HPA, it's not about occasionally getting to the right grade. It's about consistently hitting the right grade of product. And that's how, you know, some of the Western production methodologies differ from what you might have find in the Chinese market.
Correct. And if anybody's got the time to go to look at the CM Group report in the prospectus we put out, there's a breakdown of the processing of the manufacturing routes in different for different producers, and the typical processing route for HPA in China does not support either the purity or the consistency. So that I'm referring particularly there to the modified Bayer method. So the others can, but again, the market's geared to a more tolerant customer, which is the sapphire sector.
Yeah. Okay.
Matt, just if I could interject, Richard, as you mentioned, the CM report and the IPO prospectus, we will have a link in the comments below or in the show notes below, the IPO prospectus. And if you want it directly, please feel free again to reach out to rockstockchannel@rkequity.com.
I think it's important to add that I mean, we tend to talk about purity quite a lot, but in fact, our customers are just as interested, if not more interested, in the morphology, the particle shape, the particle size distribution, and the particular engineering characteristics of the material. And it's maintaining consistency of those that is so important to them.
Yeah.
Okay. Brilliant. Okay, so I guess that sort of leads into then how your particular processing route sort of stacks up. So can you just I know we talked about it in the last video, but could you just talk in general terms about what your processing route is?
So we start off with a aluminium hydroxide feedstock, which we buy from Rio Tinto in Quebec. We have other sources available to us, but we have a good relationship with Rio Tinto. We take that material and we digest it in hydrochloric acid. We then take the acidic liquor that we've produced, which is very highly bearing of aluminium, and we run it through an ion exchange process to take out certain impurities in the liquor, and that's how we take out the uranium that I referred to earlier. We're in the process of adding another ion exchange process to our plant at Capture. We end up then with a liquor that has certain impurities removed, and we take out the remainder of those impurities by essentially crystallizing out an aluminium chloride material, very high purity material. Those crystals we then heat treat in two different stages. The first stage converts the aluminium chloride to gamma HPA. And that's at a lower temperature. The second higher temperature stage converts the gamma into alpha HPA, and that basically gives us our raw HPA. It then goes into a final processing section of the plant where we sort of tailor the particle size. We may produce it as a powder, we may produce it as a slurry. And we also produce what are known as pucks, which are compressed tablets of material, which are used for manufacturing sapphire.
Okay, great. And can I ask you to explain sort of what went wrong with the asset in its first iteration and what you've changed in the new processing route to improve it now?
Okay, we haven't changed the process. The process chemistry has remained exactly the same. As I think Howard alluded to early on, there was an equipment selection problem that Orbit made. They decided to use a dual chamber fluidized bed furnace to do both of those heat treatment stages in a single piece of equipment. We use electricity as our energy source. Electrically fired fluidized bed furnaces are not that common around the world, and the choice of that type of furnace for what Orbit wanted to try to do was wrong. We basically, when we came in, we repurposed the furnace just to do the lower temperature conversion work. And we put in a more conventional tunnel furnace to do the higher temperature calcination. So we kept the old equipment, but we changed its purpose, and then we put a very large new piece of equipment in to supplement it.
And that obviously plays to your strengths somewhat because you've got the very low cost power in Quebec.
Correct. We pay less than 5 cents per kilowatt hour for our power, and it is extremely green. We're by far and away the lowest carbon sort of footprint of our amongst our peers.
Okay. And I guess sort of finally in this segment, you've obviously talked about the multi-year development runway. Can you explain why you've sort of selected this approach and why you think it's the best approach for investors and obviously for the project as well?
I think when you look at entering a market where you have such long qualification processes, and so there are technical hurdles that you have to go through, and I think also coming in as a new manufacturer, there's a matter of confidence as well for the customers. You have an extremely, when you're at the right place with your customers selling HPA, you're extremely important to them because their applications are so dependent on your material performing. So you have to go through a long process of building up confidence with them, which means that it's going to take time to ramp up production from your plant. You can't come in and switch on a big plant and expect to sell all the product from it. The customers just won't treat you in that way. So it makes sense, therefore, to have a phased investment in capacity, rolling out more and more capacity as you grow your customer relationships. And I think that's the lies at the heart of the way we've approached our plans for developing things at CapChat. We deploy capital in new equipment when we need that new equipment. We don't look to overinvest and build lots of capacity, which we can't utilize for several years.
And just to sort of come back on that, the plan at the moment in terms of what's in the prospectus and what the company's current plan is that you're fully funded now to take you along the development process. So you're not expecting to have to come back to the market to raise further capital.
That's correct. Yes, if the market develops the way we expect it to, and sales develop from what we call our stage 1 plant as we expect them to, the free cash flow that we generate from it will support the funding of the next stage.
Okay. And obviously you have the consultant's report in the listing prospectus. I can make a comment on the consultant's report. I thought it was a really good report. I did think that they were a little bit conservative on the battery side of the demand forecast. So, from my point of view, it's there certainly is a high growth market, and there's new applications of HPA being developed all the time. I mean, if I look at the market, 3 or 4 years ago when I first started looking at it, and I look at the market now, the high growth areas are very, very different to where they were, 4 or 5 years ago. Can you talk a little bit about that?
It's one of those materials where its inherent characteristics are employed in more and more applications. So it's like you have this material, how do you use it? And that's been how those sectors have grown over the past 4 or 5 years, as you're saying. Some of those wouldn't have been thought about 5 years ago, and now it's kind of almost mainstream.
Yeah. Well, I mean, even in the battery sector, the application has changed quite markedly over that 4 or 5 year period.
Yeah.
What's the total size of the market, like just in dollar terms and tons?
It's around $1 billion.
It's about $1 billion market. I'm just, for reference, lithium was $1 billion market, 10 years ago, right? And now it's 10, 20 times that big, depending on price.
When I started, Howard, it was a $500 million market.
500 million, because these are parallels that we're
100,000 tons
seeking
of
to draw here.
$5,000 a ton. Yeah, that's right. So it's a similar scale to the market, lithium market, as you say, 10 plus years ago. Yeah,
right.
Good parallel.
And as you said, the more supply there is, the more applications there are for that, and we've seen that very significantly in lithium too.
Yes. If we want to add another note, I was sent yesterday by one of the analysts who's writing research at the moment, who've been looking at peer information. CRU put out a HPA report relatively recently for one client. They had demand at 140,000 tons per annum in 2030. It's a compound annual growth rate, if I read the graphic correctly, of 20.1%. Yeah, so twice ours.
Okay, excellent. Okay, so really exciting business. My final question, really, obviously you listed a couple of weeks ago, 3 or 4 weeks ago. How did you find the listing process and everything?
Well, our life prior to listing, Matt, had been in the private sector. Howard mentioned earlier, we'd raised significant capital in the private sector and delivered a commercial scale plant. So we were able to come to market with a proposition which is about delivering on the sales, delivering on the production ramp up, and then taking us on to stage 2. So it's a very understandable proposition we brought to market. I think the pricing was about right. So if you look at the risk reward going forward, it was fairly priced, and we saw good initial support, a lot of interest in the IPO and straight after listing as well. So I think we started life in that in a good way, and it's really now up to us to deliver and create the value that is inherently there in the assets. So it's all about our capacity now to deliver. Frankly speaking, it took a little longer than expected to be able to get in, but we got in before in 2025, and we're now really well set up, well funded to go and deliver on the plan that we've talked a little bit about earlier, which is that 3,000 tons per annum in stage 1, and then the doubling of capacity with stage 2 in 2029 to give us 6,000 tons per annum. And that would make us a major player in the sector at that point in time.
Excellent. Well, good luck.
And I want to. It's a lot different than when you initially listed Orocobre, and at 15 million market cap. And I do want to continue to draw parallels here, because we have a lot of followers who have made money in the lithium space, and there are a lot of corollaries I see here with the lithium market when we started, right? Like, so high purity alumina is still highly niche, poorly understood, in many ways, where lithium was, 5 and certainly 10 years ago. Back then, lithium was hardly covered. There were very few operating companies. Investors struggled to understand pricing, customers, and markets. But there were you, Richard, and Orocobre were pioneers in that space. And Orocobre, was the primary reference point for lithium, on the ASX, not just as an operator, but as a source of very credible market information alongside Galaxy. It was basically you and Galaxy were telling all of us, what did Richard say? How do we understand the lithium market? Let's get out the charts that were in your presentation. You have very strong institutional support. I think you said 7 major institutions participated in the IPO. You got the backing of Canaccord and Ord Minnett, which will be putting research into the market in the not too distant future. This is all about execution. This isn't a promote. And, we look forward to watching you execute, and converting technical capability and customer qualifications. And, so thank you very much for this second update. And we will continue to be looking forward to following you on this journey, and getting updates from you every 4 to 6 weeks or so.
Sounds good. Thank you, Howard. Thank you, Matt.
Thank you, Howard. Thanks, Matt. Yep.
I'd also like to thank our sponsor, USCF Investments, which is a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposure, broad diversification with SDCI, and themes like ZSB for battery metals and USG for gold with income. To find out more, watch our inaugural episode with their CEO, John Love, and visit uscfinvestments.com.